Welcome back. We are talking about cryptocurrencies, Bitcoin, Ethereum, USDT, BNB. I'm learning all this right now, right here. And my guest is a colleague called Ian. Welcome back, Ian. Before we went on the break, we were talking about, whether Bitcoin is legal tender or not. And you said that right now, they're actually supported by countries like El Salvador, Russia.
Russia past regulation.
Yes, which I find is very interesting. But there's something that I wanted us to ask. What are the risks that are associated with me buying into these coins?
Just like traditional markets, prices can either go up or down in relation to the price point you bought into. Now, historically, Bitcoin has proved very volatile over the years. This is mainly attributed to the many factors that influence the price of Bitcoin. May it be a major whale in cryptocurrency. Major holders of cryptocurrencies are referred to as whales. So when a whale sells a huge amount of cryptocurrency, when they sell off, obviously the price will drop a bit. There are regulatory factors that come in, especially this year, now that the Federal Reserve plans to taper issuance of bonds and all that's going on in the Federal Reserve. There are very many factors that lead, but the risks are just like any other market. The price of your asset could go down by a major percentage. Like for example, it shed half its value as compared to the top in 2021. Right now it's standing at 36,000, and we call the all-time high was about 69,000, almost touching the tip of 70,000 US dollars.
Yeah.
So the risk you have here is if you're not uninformed, or rather have not been in the market, or rather do not have the know-how in how to navigate the trades or the world of high frequency trading, well, you might find yourself in the red. But it's not all doom and gloom, because with the advent of technology, there are crypto trading bots which you can actually employ to do the trading for you, whereby you set a certain limit beyond which if your asset drops, your asset is automatically sold maybe into a stable coin. So, such that you mitigate the risk.
Yeah.
There's a well-known strategy used by us crypto traders known as dollar cost averaging, whereby you divide the total amount that you want to invest in a particular crypto or decentralized asset into tranches. And these tranches you invest over a period of time, subsequently. Thereby, when you spread your allocation of assets, or rather your purchases over a period of time, your risk is somehow mitigated or rather reduced. So these risks, of course, as much as they are there, just like any other traditional market, there are ways to navigate them.
Ways of mitigating.
Yes.
What I like about this Bitcoin is that I am not exposed to political risks associated with currencies from different countries. I was having a conversation here yesterday with a colleague from Standard Investment Bank, and he was mentioning that Turkey has, the Turkish lira has shed off 78% on account of some of the political risks there. You don't hear this in Bitcoin and others. Yeah? Is this a reality?
Well, as I put it earlier, Bitcoin is now being viewed as an inflationary hedge and as a store of value where people can actually invest their, long-gained assets that they have accumulated and, worked themselves off over millions or rather decades to accumulate. So when you state Bitcoin as, being immune to geopolitical and whatnot influences, well, there is actually a point, because with the issue of the Turkish lira has been struggling for quite some time now. And actually, there's word in the interwebs that Turkey might actually, be looking into regulation into crypto. And at the risk of sounding...
When you say regulation of crypto, what do you mean?
Regulation of crypto in that they want to form regulations, that laws that can govern the transaction, the purchase, and the handling of Bitcoin, so that this can be handed over to the banks. Because there has been a push by the populace, or rather the major demographic, to the banks. People want to trade cryptocurrencies directly from the bank.
Interesting.
Yes.
Someone, I read somewhere, I haven't been reading a lot about crypto, but I read somewhere that someone is unable to access his account with over 100 million dollars worth of cryptocurrency because he could not remember his password.
This is actually a British national who got into cryptocurrency in 2009 and started mining crypto. So the process of mining is the actual creation of cryptocurrency, or majorly Bitcoin, whereby a number of machines linked together by the blockchain, or rather a number of machines share time to crack this hyper complicated transactions that actually form the hashes that are known as Bitcoin. So he started mining early. So he thought that he was doing an effort in futility, and he threw away his password. His password. He actually threw his hard disk into the landfill, and that was the hard disk that was containing the cryptocurrency and all the records of the currency that he had mined. So come 2021, Bitcoin hit 69,000. Obviously there was regret. So these are the risks. But now, this was an error on his side, because any crypto enthusiast or crypto trader knows that the #1 rule in cryptocurrency is security, security, security. And that is why if anyone has an account in Bitcoin, will tell you, or has an account with a major exchange that deals with cryptocurrencies, they will tell you that the process of logging into your account is actually one of the most secure processes or ways of logging into any account, because first of all, apart from your password, you have to get a notification of verification sent to your phone, and you have to verify that you're the very person who is in possession of that phone. You'll have to have your phone with you at that very time for you to get that password.
Yeah.
So okay, maybe in 2009,
perhaps biometrics
and all that, and two-factor authentication.
Yeah.
There's so many ways to kill this rat that we call security.
But so you're telling me it's not too much of a risk?
It's not too much of a risk as it were back then, because exchanges have really, and especially with the Federal Reserve, keeping a close eye and wanting to also regulate these digital exchanges, which we call DEXs, digital exchanges, they've had to step up their game in terms of security.
Fair enough. Crypto has been said of as being the currency of crime and the dark web. Is this true?
Well, during the era of the Silk Road, the digital Silk Road and the dark web, yes, maybe. It's not founded, but it is said that those are very popular case of a federal agent that was undercover trying to track this assassin for hire, who was listing himself on the dark web, and this assassin was actually accepting payments only in cryptocurrency. So that really gave a bad rep to cryptocurrencies and Bitcoin and whatnot. But as it turns out, no payments.
That must be a very modern and contemporary assassin. They used to accept gold.
Yeah, no gold anymore. Right now they're just accepting the digital gold. So yeah, there have been incidences, but with the rise of regulation and more stringent security measures by these exchanges, it's not commonplace anymore. And let me remind you, as I'd said earlier, every single transaction you make using cryptocurrency is recorded on a digital ledger that is available to anyone.
So it's easier to track.
So that is even why these culprits were very easily put under book, because
It's easier to track.
It's easier to track.
Fair enough. Although I think in defense of Bitcoin, every currency can be used for crime,
Exactly.
as long as it's available and generally accepted.
Exactly.
Okay. You have mentioned about the fall of the Bitcoin. Just try and explain it just some more. Why is this fall happening? What's causing it? And whether we should be jittery or be hopeful about the fall of the Bitcoin.
The interesting thing about, or the beauty of cryptocurrency as it is right now, is that a majority of the people invested into cryptocurrencies are actually retail investors, you and I. Okay, I, because you are a market guru. So retail investors are usually very highly influenced by, you know, local news, what Elon Musk says, what the Federal Reserve has said. So these market news, this FUD, fear and you know, uncertainty, really influences the, you know, the price of Bitcoin. In that, I, as, you know, a layman who has never forayed into, you know, traditional finance, will see the price of Bitcoin crashing and will automatically think, oh, my asset is crashing, let me sell it off real quick. So this chain reaction, this capitulation of massive sell-offs usually drives the massive sell-offs, or massive buy-ins usually drive the prices high or low at a much higher frequency than, you know, traditional markets, because most people are not seasoned. Most people invested in cryptocurrency are not seasoned you know, financial gurus who will, you know, maybe hold on to their assets. You know, they are looking to make a quick, you know, a quick US dollar or a quick buck. So right now, the price of, or the fall of Bitcoin right now, or the beginning of January, was majorly influenced by this uncertainty that was brought about by the Federal Reserve report on the inflation numbers.
Yeah.
And the proposal that they are going to taper back on the, or rather raise the interest rates, and also do something in relation to tapering back the, you know, the issuance of bonds.
Okay.
So it is right now, it is highly tied to the movement of the traditional markets. And right now, major banks in the US are now grouping cryptocurrency or Bitcoin with tech, with tech stocks.
Is that a bad thing or a good thing?
Well, it would be desirable if cryptocurrencies was put in a category of its own and not bundled with markets that are not directly related to, you know,
to tech. It is technology, I mean, backed, is it not?
It is. However, I believe it wouldn't be too much to ask to, you know, to form a separate category. But yes, the fall of Bitcoin to 36 from its all-time high was triggered by major institutional investors dumping the Bitcoin.
Is it set to continue in the next few months?
You
foresee it looking up?
Analysis and banter in the crypto space you know, dictates that it could continue to the mid of February. The price could, you know, go back down into a bear market to around 33 being the level of support, 33 being the lowest level of support, of which it is bound to, you know, bounce back to its all-time high, maybe after February. And it is highly dependent on sentiment from the Federal Reserve.
I still wonder, I know I am supposed to be starting to wind up our conversation, yes. But I still wonder how Bitcoin and its performance is connected to the interest rates by the Fed, because you remember our conversation that it is not tied to any nation's political whims or the reality of their currencies. Why is this so?
In order to answer this in the most basic way, let's formulate an analogy. It's 2021, it's June. The Federal Reserve, or rather the US government, has just released its stimulus package and to the populace. So people are wondering, what do I do with this money? You know, there hasn't been such a huge deluge of money in history as there was back in.
So there was excess cash and guys opted to take it to Bitcoin.
opted to take it to Bitcoin.
Now the Fed Reserve is mopping the market. There is no longer excess cash.
There's no excess cash, so people are, thinking how a normal family would. Should I spend this money on food?
Some are liquefying their investment in Bitcoin.
People are liquidating their assets, and others are holding back from investing.
I hear you. In Kenya, do we have a lot of Bitcoin enthusiasts?
It'll be interesting to note that in Kenya leads the world in terms of peer-to-peer transactions.
Which is what you call retail, you and I.
You and I. A peer-to-peer transaction is an electronic transaction that is transacted between two people that is monitored by an intermediary, a digital intermediary. So it's completely electronic, and the only overseeing body is the digital intermediary, which maybe will be holding your cash or facilitating the transfer of cash from my account, my digital account, or my digital wallet to your digital wallet. So it's transaction between you and I. So right now, Kenya is, by data at the close of 2021, Kenya was leading the world in peer-to-peer transactions. And yeah, I can say that Kenyans are really early adopters of any form of technology.
Interesting. One Bitcoin is over 4 million Kenya shillings. Does this work where I can buy a half a Bitcoin or a quarter Bitcoin, or it's just like the stock market? One unit is a whole unit.
No, you can buy in fractions. You can invest as little as 500. You'll just get a fraction of a Bitcoin, 0.000 of a Bitcoin. You don't have to buy it. It's not specifically tied to a unit.
Oh, I thought I have to have a million shillings, because in the stock market you can't buy half a stock.
No, I think the lower limit should be about 500, according to the P2P platform that I use.
500 shillings?
500 Kenya shillings.
Or $500?
500 Kenya shillings.
Oh, yeah. Interesting. Is this the right time to invest there?
Buy the dip. Buy the dip is all I can tell you, because right now the market crashed at the beginning of January to the lowest, okay, not the lowest, but the lowest in recent times of 33,000 US dollars. Right now it's at 36, so we're still in the mid 30s. So if you're looking to get into crypto or crypto markets, this is the time to invest. In crypto, that's usually our mantra: buy the dip, sell the highs.
Interesting. Do we have any hopes of having a Kenyan crypto?
The state, I
don't know, like shilingi, bit shilingi or something.
Well, the sentiment by the Central Bank of Kenya is that cryptocurrency is not an issue of concern to Kenyans.
Or interest,
for that matter. But they will be addressing the issue of cryptocurrencies in the long term. So I think you can deduce from that statement what the stand.
It's more of wait and see.
It's more of a wait and see.
If guys like it, then we'll have to go where people are.
It's more like me back in 2012 holding back from buying into my quail. Because you want to wait and see first.
The quail craziness.
The quail eggs, yes.
There was a question from a gentleman called Venton, and he had asked that you clarify, is Bitcoin a pyramid?
Bitcoin
is it a pyramid scheme?
A technology that is backed by the blockchain, or rather digital transactions that are recorded on a digital ledger known as the blockchain. The difference, or the major signifying difference between Bitcoin and a pyramid scheme is that Bitcoins still are decentralized. You have to answer to a specific company or a specific entity, which thereby runs off with your money. Hence, in
a pyramid scheme, it's centralized.
It's centralized
to one individual who runs your money.
Who, if decides to close up his briefcase and run off, will collapse. Bitcoin is not controlled by any one entity. It is decentralized. It is actually the very first decentralized digital currency in the world, and it is backed by a white paper. You can actually look it up. That was written by Satoshi Nakamoto.
Nakamoto indeed, Nakamoto. Well, that has been a conversation about Bitcoins a few years back. If you were to travel from Nairobi CBD to JKA, you needed to get out of your wallet at least 2,500 shillings. Now you can do it for less than 1,000 shillings because of technology. If you wanted to travel to Mombasa, you needed to get booking in a high-end hotel with over, 7,000 per night in terms of accommodation. Now you can do so with less than half of that because of Airbnb. Technology is disruptive, it can be messy, but it has a way of democratizing the economic space, and it is about to do that in the economic space or in the currency space through the cryptocurrencies. They are messy and they are disruptive, and of course they portend significant risks in terms of price volatility. However, moving forward, you cannot ignore cryptocurrency. It's going to be, and it's going to continue to be. This has been an interesting conversation with a colleague called Ian, and we look forward to another session of Markets Today tomorrow at 4 p.m. Don't miss it for anything as we close the week. I'm your host, Odhiambo Ramogi, and it has been a pleasure to have you to watch the show. Goodbye. I'll leave you with the currencies of the day running through your screen. Asante sana.